holding the stream for quite a considerable length of time after it finishes, after we finish chatting. The Facebook one has been cutting off. We are working on resolving it, and we apologise to anyone who this has inconvenienced.
Yes, indeed, mate. We've had this technical stuff seems to be just something different seems to come up every day. It's fun.
I know, it's crazy. Do you know you've got your Facebook page up, Mr. Postal?
Do I have one? What?
Facebook page is coming through. Are you sharing?
I'm sharing the Patreon. Should be Patreon page. What about
there
now?
It is. It just looked like Facebook.
No, that was our Patreon page.
Well, ladies and gentlemen, we'll get straight into it today because we have a rather busy day today. We've got a few things we want to get through. So as you will notice, I'll hand over to my side very, very shortly, but as you will notice, Bitcoin is currently sitting around the 9,500 US. So what it did over the weekend is it decided it would not sail in those clear, calm seas, enjoying the scenery, the stormy waters of what's known as a bearish market. And so it's actually there and the bears are growling. But will they continue to growl?
This is the thing.
Because if I can just interact just for a second, Stace, the biggest story I saw today was 3 reasons analysts are bullish on Bitcoin despite the 33% price correction. So even though the markets have gone down and everything shows that it is actually a bearish market, a lot of analysts are actually saying it's just temporary. It's coming back. What do you think?
Well, it certainly goes along with the message that I've been giving over the last week or so. Look, yes, we've got a little bit of I wouldn't call it a bear market at all, to be honest. We've had a correction. There's no doubt about it. But is it cause for concern? No, I don't believe so. This is just natural, especially when you look back over the history of Bitcoin and previous bull markets. It does this all the time. It tears up, has a bit of a pullback, and then tears up again, right? So this right now is what we'd consider a very good buying opportunity because it's, as they say, though, you buy the dip, right? So
yeah, absolutely.
This is a dip.
So anyone who did happen to buy it out there at 13,000, you've been going, oh my God, how low do I let it go? Just stay. You're going to make money. It will come back.
Stay and hold.
And besides, buy some more because your dollar price, what is it? Dollar averaging?
Dollar cost averaging.
That's the one. Dollar price, dollar cost, same horse, different jockey.
Yeah, that's right. So look, and this is the thing, right? Nobody can really predict what the price of Bitcoin's going to be from day to day, week to week, or whatever. So the safest and easiest way to get yourself into the market is just to allocate a little bit every week, every fortnight, every month, and just buy a little bit.
But as always, don't invest any more than you're willing to lose. And this is general advice only. We're not giving you financial advice. We're here for entertainment purposes only.
Very, very much. And even then, we're struggling.
I don't know. I think we're pretty entertaining.
Makes people laugh, if nothing else.
That's right. Right. So what crazy news stories do you have today, Mr. Basil?
Well, first of all, we'll do a quick top 10. Over the last day, we've got very little movement. We did have a bit of certainly a downturn about 24 hours ago, where the market had dropped quite a bit. At the moment, we're sitting, Bitcoin's about 0.6 up, but it's 0.6 down in the last hour. So we really haven't done much in the last day. We are down 11% for the week. Ethereum's basically sitting dead on, hasn't really moved in 24 hours. It's also down 10% for the week. XRP hasn't really moved. It's down about almost 8%. And looking down across the top 10, we really don't have much movement. Litecoin's up a cent. Binance Coin's up a fraz. And look, that's pretty much the top 10, right? I mean, it's a similar story right across the board. So there's not much happening in that space. Now, in line with what you were saying about the bullish outlook, remember we talked last week about the report, the free report that's available from CoinGecko, the quarterly report. One of the good indicators of incoming money into the sector is certainly the search trends. And one of the items that the report does talk about is market dynamics. And one of the things it picks up was the search trends. And over the previous quarter, Bitcoin actually exceeded the Google search for stocks.
Yeah.
So that's a real uptick, which means people are obviously searching for Bitcoin and wanting to learn a bit more about it. So I thought that was quite interesting.
Yep.
Also,
it is actually because one of the stories and one of the reasons that the analysts think that it's really going to be a bull market is called miner capitulation, i.e. a lot of miners selling out and it's currently, and thus bringing a lot more Bitcoin into the market. And it's currently following the same trends it has through 2011 onwards, where the prices drop, but the capitulation has matched that drop and then it rises again.
Yep, absolutely. Look, I mean, and this is the thing, if you sort of really take that step back and look at the overall trends, you do see those patterns.
Yeah.
But quite often, and as we do here, we sit down and we look at our markets and we go, oh, what's it done in the last 24 hours or 7 days, and if you're only focusing on those very short time frames, you are missing quite often that wider view, right?
Yes.
So I saw this one. This was an interesting article as well, where this particular article talked about 7 different financial crisis triggers that actually will help boost Bitcoin adoption, which again is quite in line with a lot of the things that we've been saying about on this podcast. And so I'll just quickly go through a couple of these things here. They talk about government debt. Well, I've been on about that for quite some time. And in most global economies, it's definitely getting out of control.
Yep.
Pardon me. And the problem here is that the debt is now getting so large that most governments can't really meet their financial liabilities. And
that's why they print more money.
They do, right? And that causes a negative return. But the ever-increasing debt ceiling in the US just keeps, they just keep pushing that up, right? And right now they're in talks again to push it up again. So this continuation of just printing more money and adding more debt, it's not sustainable, and we need an alternative to get us out of this problem. So Bitcoin is a great alternative. The second trigger it talks about is could be something to do with the stock market. And again, I've sort of talked about this, where it turns out that a lot of the growth in stock market prices in the last few years has actually been a combination of central banks buying stocks and companies themselves buying back stocks. So the pricing has been artificially inflated, not through revenue growth or productivity growth or any of the real indicators. They've been artificially propped up. So looking at the stock market right now, it's my perspective is it's very overpriced, and it doesn't follow true revenue growth and those sorts of things. So and the fact is we haven't had a serious crash since 2008. So
yeah, that's very true.
We've got to be heading for another downturn. Another one is a global movement towards discouraging savings, right? And we've talked a bit about the negative interest rates and how crazy that seems, but it's already happening in other countries around the world, and quite frankly, we could be heading there as well. So combine the move down on interest, and you've spoken about a couple of times, what sort of interest do you get out of a bank these days for depositing money? So.
Well, they tell you you're getting interest, but the reality is their fees exceed any interest you get. Excuse me.
Absolutely. So, and the other thing he says here is that fractional reserve banking, whereby a bank does not need a deposit to issue a loan, also contributes to excessive debts, as does the lack of saving deposits, which now cost money under negative rates, right? So people are going to look for somewhere to put their wealth, put their money. The cryptocurrency space are definitely offering that option. And here's another interesting one, which I haven't spoken a lot about, but it is a concern, is insolvent pension schemes, whereby governments do not have enough to meet their obligations, could also become a trigger.
Yeah.
And this is definitely becoming a problem around the world, where governments just don't have the money.
Population. People are living longer, rising population, more people need help.
Absolutely. So again, people
stop it, ladies and gentlemen. Check out when you're supposed to.
Yeah, absolutely. There's also a massive overdependent on student loans, where students were sold the promise that once they're qualified, they get a better job and more money and be able to pay off their debt.
I don't understand how anyone can not realise that is not true when you've racked up $300,000 or whatever in student loans.
Yeah, it's scary stuff. It's absolutely scary stuff. I mean, it's putting these poor students, in such a negative situation before they even start out their career.
But we don't have them that high here in Australia, but we definitely have them in $100,000.
But we still, I mean, look, the average degree in Australia will cost you between 20 to 30,000 just as a basic degree. Some of them will be more, but in America, it's nothing to have $100,000 student loan.
Plus,
which is just scary stuff, right? And the other thing is the credit card debt. There's skyrocketing around, because people are struggling to make ends meet, so they're naturally relying on credit cards, and the banks are quite happy to hand them out willy-nilly, right? Because it just traps more people into that system, and they're making a fortune off those interest rates. Yeah. And also we've got an over-dependence on real estate markets, as we absolutely do in Australia. So an economic downturn, which may impact, which has already started here in Australia. Most of our real estate prices have gone negative. So combine that with the banks that and our governments are just trying to print money, but they rely on lower risk assets such as property to issue these mortgages, right? And that's where they make a lot of their money from. So people, especially here in Australia, we've been, and it's happened just recently, where APRA have relaxed the lending rules again, right? So the banks have opened up the floodgates to lend a whole bunch more money to people who, quite frankly, probably shouldn't be getting loans, and but they do. So look, all of these options, all of these triggers that we've talked about, people are going to look for alternatives. Other means to provide a better means of exchange, potentially a better store of value, and cryptocurrency assets are providing an alternative in that space.
Absolutely.
So, and in line with the credit card we just talked about, this article here talks about the credit card splurge as being an imminent storm, right? And some of the factors they talk about in this is the fact that the interest rate versus the Fed rate, and as we know, you can see a bit of a very big delta there between this red line, which is the effective federal rate, federal funds rate, and these dots up here, which is the commercial rates for credit cards.
Oh, we'll have a look at it here in Australia. Our commercial rates are 21%.
Yes, I know. This is exactly
rate is almost zero.
Yeah, here they're averaging close to 17%. But as you said, here in Australia, most of their credit cards, unless you're
over 20,
lower ones,
20.5, 21.5, 22, whatever
it's ridiculous.
The Fed rate is like 2%.
Yeah, absolutely. And look, if anyone's out there on a credit card that's charging you more than 13, 14%, you need to get rid of it or change it or do something. With the interest rates the way they are, we should not be paying, well, no one should be paying the interest rates that most of them are charging. Now, the problem with this is that obviously the higher interest rates and people being in debt, obviously the payments that they're going to need to make are going to continue to go higher.
That's correct.
But this concerning thing is that from the figures here, it's not actually stopping consumers from adding to their debt, right? And so the amount of money that consumers are adding to their credit cards just continues to go up. But I think that's a sign of the fact that people are unable to make ends meet, and so their only way out is to keep adding to the debt.
Yeah.
Right, and so they've got more figures here to show that the credit card debt is just further accelerating. The other thing that we talked about is the mortgages, and this little chart here shows the difference between mortgage buyers and cash buyers. right? And again, there's a very sudden delta that seems to have happened again. So less people are being able to afford to purchase via cash. So all of this just continues to tell us that people are going heavier into debt, and this debt bubble really cannot continue.
Yep.
All right, so moving on, I did find this one as well about Facebook. They have acknowledged that they've got a bit of a headwind that they're going to have to overcome, and that is obviously with the regulators, which is hardly any surprise to anybody. But the interesting comment that was here was that I suppose Zuckerberg's belief that whatever it's going to take, they're going to get there. And look, I agree. As we've said, as we've discussed.
They will, because it's linked to fiat. It's linked to fiat currency, so they're just going to continue to go until they get it.
Well, they've got the resources, right?
Yeah.
The fact that whether or not it's linked to fiat currencies, I think, is probably not a major thing. It's really the fact that they've got the money, the backing, and the resources, the legal eagles, the legal team, and the people they've got behind them. They're going to find a way. They're going to make it happen, right? So it's going to be interesting. But as I said before, I think the positive thing from the crypto industry is the marketing and the news that's coming out of all this. But they're also going to lead the way, and they're going to force the hand of these regulators to make decisions and to be clearer around what the regulations for cryptocurrencies will actually mean.
Yep. Don't disagree at all.
So I think that's really good.
So I think for this week, we're probably in for a bit of a wild ride, ladies and gentlemen. But the thing is, just hold on to your hat, enjoy the ride. And everyone likes to go on a roller coaster every now and then. You just don't stay on it forever. This one won't last forever. Eventually, you're going to start climbing that hill again.
Yeah, look, mate, I think there's a very good chance that come August, we could be heading upward in a very fast pace again. Absolutely.
Well, that is my hope, my everything. So let's just sit back and enjoy the ride until then and see where we go.
Yeah, absolutely. Hey, listen, the other thing I'll just quickly mention was that if you want to learn more about crypto and you want to earn a bit of money at the same time, Coinbase has a program that's called Earn, and it's a really cool idea. I think it's actually really good, where they offer different courses in different projects. And by doing the course, you actually earn money in that particular project.
Wow!
So that's
not bad.
That's really cool. Yeah. I think that's really cool. It's not. I haven't. I just noticed that. I haven't. Well, I didn't just notice. I actually saw it a little while ago, but I haven't had a chance to actually look through all the different courses that they've got available. There's obviously about half a dozen or so there. Yeah. But look, I just thought I'd mention that one. I thought that one was quite good, and I like the fact that they are actually providing learning for people, but offering a little bit in exchange. I think that's pretty cool. That's pretty cool.
It's awesome. All right. Well, I think that's it for us for today, Mr. Basel.
Yeah, mate.
What do you say? Oh, except for Bill Miller. Have you heard of? I think his name is Bill Miller.
No.
He's some hedge fund operator in America, and apparently he's quite famous and quite big. So no wonder we haven't heard from him because he keeps quiet. Well, his hedge fund has returned profits this quarter of 47%. Sorry, for the first half of 2019, I think it is. And
that's pretty high for a hedge fund.
It is pretty high, but the analysts are saying the reason it's returned it is he threw a lot of their money into Bitcoin. So there you have it, ladies and gentlemen. If you want to have a look at that, have a look on cointelegraph.com. There's a nice story about it there. And as always, we will put all of this in the show notes for you. Right? But until then, that's it from us, ladies and gentlemen. Thank you for joining us in this journey through the crazy crypto world. And if you'd like to get access to the bonus material that Stacey and I put together, that log in and join us on Patreon. All you have to do is become a subscriber. We have different levels of subscription available to you, and we're happy to take anyone at any level. So until then, have a great day. And
have a crazy old day, folks.
Tomorrow. So have a great one. Have a good one, Stacey. I'll chat to you very, very soon, my friend.
You too, mate. Catch up.
Cheers.